Hi, and welcome to the Market Alert for Monday, the 17th of January 2022. So futures slide on Friday, disappointing earnings from JP Morgan. Tech rout worsens. Market sentiment has been shaken by concerns over the prospect of imminent Fed tightening, along with record global COVID-19 infection rates. But we won't expect either of these factors to end the equity rally. So the question is, why is it struggling now then? So let's see what happens this week. There's not a lot of news out this week, actually. It's very quiet. Today is Martin Luther King Day, if I recall. So the bond market will be closed. And then we've just got economic sentiment tomorrow and manufacturing CPI for the UK on Wednesday, which will be an interesting one to look at. Still showing an increase there, up to 5.2 is forecast. And also you've got Bailey speaking as well. Philly Fed on Thursday, and obviously unemployment claims, weekly ones. Crude oil inventories, they've moved to Thursday because normally it's Wednesday, but with it being a bank holiday in the US today, that moves back a day. And then Friday, retail sales. So there's no central bankers apart from Bailey, who will be speaking on Wednesday. But absolutely no news today. Market will have to make its own direction, which is probably in an upward direction. Let's start off by looking at the Dow. And this is the weekly chart of the Dow. I like to, the start of the week, like to have a look and see where we are in the bigger picture. And I can see that now the all-time high has been left behind the week before last. Last week we saw some selling across the week in the Dow, and the market trading back to 50% of this move to here. So a crucial area at the 35,800 level. So you want to watch that one, keep an eye on it. And in the daily chart, you can see the last 2 weeks choppiness down, the market finding support with a retracement back up there, which you'll see there 89% on this one. But if we draw the fib in from the high down to here, you will see that we have the golden ratio there, the market coming back to 62% on Thursday of last week, and then Friday down, Monday finding a bit of support at the 50 bar moving average there. So watch this level, and then you've also got 78 and 89 just below this. The market's already been below this and put in a double bottom to the left, and there is some divergence there in the stochastics. But as I say, there's no news today, and generally, and I'd say that not being a prediction, but generally and statistically, the market tends to move to the upside if there is no news. However, we do have that tapering and the prospect of a rate increase in the background. And on Friday, that's what we did see, where we got a shakeout to the downside. The market was bought back as the Dow opened, it was then sold into, and the market moved lower until we had demand coming into the market, which you can see here. Further divergence as the momentum started to switch, and then the market making its way back before the close of trade. Overnight prices have moved to the downside, which you can see there, and they've been in a bit of a sideways range as well. And trying to move to the upside there, we'll need to take out the DP level and also the 50 EMA and also Friday's close as well. And then we've got the high there of Friday as well to have a look at and take out. Well, this is when I say the high, actually this is the high of the overnight, isn't it? Yes, there's 22.30, which you can see up there. So that's the high that needs to be taken out. That's an overnight high, and Friday's high is up here before the market actually sold off, which was also a DP level. So quite a resistance level there to get through. Plus you've got the 200 MA to get through as well. In the German DAX, let me just show more of the chart. Again, let's have a look at the weekly chart of the DAX, bigger picture. We've had selling the week before last. Last week we've got supply coming into the market as well. You can see this increase with the stochastics attempting to move back. So there's still momentum to the upside there, also in the parabolic as well. And let me just remove this one because we need to draw in from this high to this high, and here on the weekly are your areas of Fibonacci resistance if the market does work its way back up. At the moment it's sitting on 38% of this retracement, which is good, and also still closing above the 5-bar moving average, so it could move to the upside quite easily there at the moment. And again, as the Dow is actually the Dow's trading today, it's the bond markets are closed, but as it's a holiday, again the market tends to be one direction when it chooses that direction, of course. And in the daily chart, which is somewhere here, there we go. So in the daily chart of the DAX, again you can see that we've had support coming into the market on Friday. This is demand coming in. They held the market, and now they're going to attempt to move it back to the upside as well. So I'm just going to remove a few of these fibs just to clean things up and just show you on the upside, because we traded to the 62% on the upside, and now we've traded to 62 on the downside as well. But we have from here to project back as well. So before we get back to that 62, there's a set of fibs that we can take out on the upside and also use as profit targets as well. So you can see now that the market is trading at the 38, and then we've got the 50, 62, etc. as the market moves up. So you can see at the 62, you've also got, if I just drag these out just to make them a bit cleaner, you can see that we've got the 89% retracement as well, which is more or less at the same level. So quite a resistance here should the market move to the upside. The other ones, as the market moves higher, or should it move higher, won't be too much of an issue to take out. But watch the 62, because it sort of converges with that 89% there. In the 30-minute chart for Friday, it was very sideways to begin with. Then there was a sell-off in the Dow, and then the market moving slightly lower there. Moved down 100 points. Again, found demand as the market found support, and then there's a crossover, and it traded to the S1 as well. A bit of climatic volume there as well as the market came back, and then the volume started to drop off, the market making rising lows, and then we started to break out and move to the upside with prices trading up to the 89%, 78% level there, and the 200 MA before making its way back down. Where did it trade back to? Well, from this high to here, it traded to 78% as well. And then inside of here, you've got another 78% as well. Let me just use a blue colour. There you go, from there to there, before the market then moved back to the upside. Overnight prices sideways, well down, but still in a range there. You can see about a 34-point range at the moment, but trying to get above the close of Friday. Need to take out the 200 and also Friday's high as well. So at the DP at the moment, very important level to continue to close above this area. In the 2-minute chart on Friday morning, you can see that it was really choppy as the market waited and then kicked off with the classic retracement there, up back, a 78% retracement at the 200 MA. Prices moving up to the DP, that's the target. Market stops at the DP, comes back 8, and then does these multiple 89% retracements before then breaking below the 20, finding a bit of support at this area, closing back below the 50, and then back down to Thursday's low. Thursday's low, and any low, is going to be very important in the market, as you know, and then they managed to bring the market back, and then pulling back to Thursday's close there, and the 200 MA. Again, you'll see how prices stop at these areas, and then we go back and we double top across here as at the DP level before prices move to the downside. There are no automatic signals in there, but that's a nice trading pattern there that conforms to the pivots, to support, and Fibonacci's, along with the averages and everything else as well. In the afternoon session, the market took off immediately. The Dow moving higher before it moved to the downside. And again, you've got this triple top formation at the top here, and then a potential sell signal there where the market moved lower. It came back 89% of this move before starting to move to the downside, and then coming back to here before it the support, the psychological support, before closing back above the 5-bar moving average there, which would have given a profit of 22 points thereabouts, and then the market trading sideways before continuing after the 4 p.m. cutoff. So just a quick look inside for the overnight prices in the German DAX. You can see at the moment prices moving quite sharply to the upside, getting through the DP level and the 200 MA, and the averages actually all lining up quite nicely because you've got the 200 below the 50, 20 above the 50, and the 5 above the 20 there. So bullish there at the moment. A quick look at the metals market before I conclude, and we'll start off. Well, no, I'll get the right chart first. There we go. And let me just again make sure you can see more of it. So the metals on Friday getting hammered because the dollar, which we looked at on Friday morning, was at a crucial 89% area, reversed and moved to the upside. However, prices seem to be holding at the moment at the 20-bar moving average in the daily chart. We need to get above these two 89% retracements. We need to hold comfortably above the 23 and then move higher. There's a lot of resistance in this chart at the 23.50 area is going to be the main psychological level. So it's going to take a lot to get through on the upside for silver there. Again, you can see the London fix on Friday and then coming under pressure. It's not selling off as violently as it used to. I don't know whether they're struggling to manage to achieve this or pull this off anymore, but I have heard that Bank of America are 800 million ounces short, and that's going to take some getting out of. The last thing they need is the market to move to the upside because they lose so much money with a $1 move on that sort of silver. I think it's going to be about $800 million loss for every $1 or something. So some serious pressure in the metals market at the moment to keep them to the downside, which we've seen for quite some time now, just getting on to a year before we saw a change from $30 when it hit that level all the way back down to 21 in the summer. Gold also sideways to higher as well, trying to move to the upside. The dollar, you can see there, Friday moving back to the upside. Actually, it was 78, not 89. Apologies for that. I knew we had one of those support areas there. So prices moving up, stuck at the 5-bar for the dollar. We want to see this move to the downside. That will support the metals market. And the price of fuel continues to move higher as well. Looking at fundamentals, we're now trading at the $85 per barrel level. This could go a lot higher, heading towards the $100 per barrel level. And in the weekly chart of crude, you can see this. We've got resistance here to the left. If this is taken out, we head up towards that $100 per barrel level, which you can see is already marked up on the chart here, because that's coming from a previous high of $103 per barrel. So we want to keep an eye on this one because that's just going to add to the fuel and financial inflation issues for all of us. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.